Hello and welcome to another update video on PayPal. It's a stock that I bought a few days ago, and I will explain to you why I did that. We are building, as MCO, we are building a stocks portfolio. It's an experimental project where we're bringing, fundamentals and Elliot wave together and combine that in a portfolio. If you follow us in our stocks membership, then you already know about this, and this is also where I talk about all the positions, entries, exits, portfolio balancing. Please note it's not for copy trading, really. I mean, you can follow if you want to, but it's more an experimental built-in public project because the goal is to combine the fundamental analysis, macro analysis, and Elliott wave analysis together to come up with a not a reasonable strategy, but a profitable strategy to manage portfolios eventually. So it's a project, but you can follow if you like to. PayPal is one of these. Stocks that I bought already in October, just a few days ago, and the price went down a little further since then. That was actually expected, and I'll talk about why. And I just want to make sure that it's clear why PayPal, and that I might even add a little bit more to the portfolio in October. And I want to talk about the Elliott wave analysis first. And then we also talk a little bit about PayPal and the fundamental aspects of PayPal and why PayPal could be interesting, also from a valuation perspective. Now, what we have on this larger time frame chart, we have a 5-wave move up. We have a corrective pullback. Yep, that is sharp and deep. And you would argue it's not necessarily a very clear 3-wave move down. So it's the only thing that's a little bit it's less than ideal on this chart. It was quite a sharp correction, right? And the good news is, though, that the price held the 78.6 retracement level at around $50 perfectly and then started a recovery. What's not so good here is that the move to the upside from the 2023 low is only a 3-wave move. Well, there are ways how the market can still grind higher despite this 3-wave move up. But for anybody who is considering to enter PayPal, please note there is a high risk of one more low here, maybe even in the low $40 region or so. Yeah. The reason is that the move up from the October 23 low was just a 3-wave move. However, and you will see that on the smaller time frame, there is a 5-wave move up from the April low, and therefore there is a case to be made for a trend reversal. It's not stable yet. It's pretty fragile, yeah, and it would only work if we are forming some kind of a diagonal pattern to the upside. So it's very, very speculative, you could say. And there are many other scenarios that could play out here. We could even argue maybe this is an A wave, yeah, and then we're forming now a B wave rally. So A wave down, B wave rally. But even then we should go higher because this is an A, B, and then 1, 2, 3, 4, 5 in a wave C of B. So A down, yeah, and then A, B, C of a larger B wave. But even then, there should be, there's at least a plausible case we can make for a rally towards $100 plus, yeah. Now in the best case, this just breaks out and goes to $300, $400 plus. Medium to long term, yeah. It's not like something that should happen in the next few weeks. However, let's talk about the short-term chart. Let's talk about the short-term, which is interesting because this is the main reason why I added a small starter position for PayPal to the portfolio. Now, PayPal is one of the stocks that I cover in our stocks membership at least once a week. And we have a 5-wave move up. We've been tracking this for quite some time. A 5-wave move up. Again, we could add the wave 1 here or here. I have it up here. It makes sense. It's a leading diagonal to the upside in circle wave 1 here on the smaller time frame. And then based on that, we defined a support area between $60.20 and $69.46. So this here would be a wave 2. We formed that ABC structure nearly perfectly. Yeah. And now we are coming down, and I'm looking for a bottoming attempt in the area here between $64.59 to $60.21. Anything below $60.21 is a bit deep. But for now, this is, it's formed the A wave, it's formed the B wave, and 5 waves down in wave C. And we've nearly hit the 100% extension. So interesting. So I'm watching here for a potential reversal. But there is no sign yet that the bulls have started. Okay, it can go lower, no problem. There is no sign this is turned around yet. Therefore, I only added a small starter position. If we go a little lower, I might add a little more, but basically the idea is to get a small position. Don't get I don't want to get positioned when everybody's already in, right? It's based on a technical thesis, a 1-2 setup, but also a fundamental one, okay? So I'm not trading particularly here, specifically this 1-2 setup. It's a nice bonus. Yeah, there's scope for reversal, which is why there is, there is a setup, okay, for a possible third wave that could eventually, that could eventually take us to $100 plus, yeah? But we need to hold above $60.20. The invalidation point is $56. Should we break below it? I mean, will I stop out or something? No, because this is part of a portfolio planning strategy. And the fundamental case will not break if we go below $56. I did say we're combining Elliott wave here with fundamentals. So as long as the fundamental case is also still intact, I'd be quite comfortable to hold PayPal, even if you go a little lower. That's why we only have a first small starting position, right? It's basically already planned like that. If we go down lower, there would be another support area there where I would then expect the market to turn around. But the price of this stock is already quite attractive, especially compared to historical valuations. So I would say let's talk a little bit about PayPal, and let's also talk a little bit about the financial metrics. To do that, we go to our partner broker, XTB. If you're wondering where you could trade PayPal, you can do that here on XTB. XTB offers commission-free trading. You can even qualify for a free stock, potentially, depending on where you live. But feel free to follow the link in the description and comment section. It's an affiliate link. You support our project with that. If you're looking for a broker anyway, you can try it out. Here on XTB, I mean, you can trade it. You can even trade the CFD, and you get a lot of additional updates here. For example, through the news page, there's a calendar. But what we actually want to use here today, it's the financials, right? We want to talk about the financials. By the way, you can also see if a company paid dividends and everything, but obviously PayPal didn't and doesn't. It's basically a tech stock, which is going through a restructuring program. And I want to talk a little bit about the financials and also what PayPal is doing and why I consider PayPal a good fit for our portfolio, right? So I don't want to make it too long, but I want to give you some background, and then we'll see how Elliott wave and fundamentals basically go together. Now, the company has gone through one of the most interesting transformations we've seen in the tech space over the last few years, I think. Yeah, PayPal used to be a pure growth stock, and it was riding the wave of digital payments and e-commerce. Yeah, especially all the way up to the high in 2021. You saw that on the chart. Now, for a long time, it was priced like a tech darling, like high growth, high expectations, and no room for error. But that phase is over. So what we're looking at today is a company that has moved from being a high growth story to a profitable cash generating value stock. That's my view. Yeah, that shift has been painful. Yes, the stock dropped more than 80% from its peak. But in many ways, that correction might have been necessary. It allowed the valuation to reset and expectations to normalize. During the boom years, and you saw that on the chart around 2020 and 2021, where, there was a hype around this stock, PayPal traded at over 60 times earnings. That's a PE ratio above 60. Investors paid an enormous premium for future growth. But today, the same company, trades around 15 times earnings. So roughly 1/4 of that old valuation. The business didn't collapse, the multiple did. And that's the key difference. Yeah, PayPal is no longer a speculative play on future growth. It's now a real business with strong earnings, strong cash flow, and a clean balance sheet. Now let's look at the key numbers. I'll go through a few of the most important metrics, and I'll explain them in let's say, simple terms so you can follow as well. Now we have a revenue per share up here, around $32. That number has grown steadily over the past few years, even while the stock price fell. It tells us that the business itself hasn't shrunk. it's still generating consistent sales, and it is still expanding. Then we've got earnings per share, or EPS. It's around $4. Sorry, around $4, 4.73 here. Yeah, up in the center there. That's what PayPal actually earns per share after all costs and taxes. So when you divide the stock price by this number, you get the PE ratio, and at around 15, it's well below the historical average. Yeah, that means the market values PayPal today more like a utility or a bank than a tech company. We've got return on equity, ROE. It's almost 23%. This basically measures how efficiently PayPal turns shareholder capital into profit. And in simple terms, for every dollar of equity in the business, PayPal earns about 23 cents of profit. That's a very strong result, especially for a company that is already mature. Then we've got the other one that I normally look at is ROIC, which is here 14.6%. That shows how well the company uses both its own money and borrowed funds to make returns. And anything above 10% is generally considered good. So 14% means PayPal's capital is being used effectively. Yeah, it's not wasted. And then operating margin down there, 19%. This shows how much profit the company keeps from every dollar of revenue after paying for day-to-day operations. So for every $100 that come in, PayPal keeps around $19 before interest and taxes. That's a healthy margin. Yeah, it's not sky high like software companies, but it's very strong for the payments industry, where competition is quite intense. Now maybe a couple more. Free cash flow, because that's one of PayPal's biggest strengths. The company has a free cash flow yield of about 8%. That means for every $100 of market value, it generates $8 in real available cash every year. So free cash flow is what's left after all the expenses, investments, and capital costs. So it's the money the company could use to buy back shares, pay dividends, or strengthen its balance sheet. And 8% is an excellent number. It shows PayPal is basically quietly a cash machine. Let me just, let's just do one more here, which is the debt to equity ratio. It's 0.56, which means the company isn't heavily leveraged. So it doesn't rely too much on borrowed money to operate, and that gives it flexibility in an environment with higher interest rates. So, I mean, what does it all mean, right? These numbers tell us one thing. PayPal is not a broken business, even though sentiment for this stock is low and it was recently downgraded, right? No, the question is, right, it was downgraded. You know, why wasn't it downgraded when it was at the top? Like when it was completely overvalued, completely crazy, right? So I don't believe this stuff. But yeah, PayPal is not a broken business. It's not collapsing. It's been re-rated, yeah, by the market as well. It was, of course, it was re-rated. Yeah, it was, the value has gone down, but we have a proper valuation now. And earnings, margins, cash flow all show stability and strength. The only thing that changed is how much investors are willing to pay for those earnings. And the sentiment turned bearish, but the fundamentals never really fell apart. And that's exactly the kind of situation we look in one of the categories in our portfolio. Turnaround and valuation distortion play. Yeah. And also we have an Elliot wave setup, a 1-2 setup. So for me, it fits perfectly into our portfolio, the MCO Foundation 1 portfolio, we call it, because the first one is building the foundation of maybe a set of different portfolios we're going to build. It's undervalued, it's profitable, and it's a cash flow machine. And it's going through a management-driven restructuring phase under its new CEO. So that combination, like low expectations, yeah, high profitability, and the potential for improved execution, that creates, yeah, an asymmetry, limited downside, but significant upside if sentiment improves. So it's not a short-term trade. It's the kind of position you take early, you hold patiently, and then you let the market catch up to the company's real value at some point. So PayPal today, for me, it's a value stock disguised as a tech company. It's not the exciting story it once was. I mean, other stocks have taken their place. But that's exactly why it's interesting again. The fundamentals are strong. Valuation, in my view, is quite fair, and the sentiment is still low. And that's often where the best long-term opportunities begin. So for us, PayPal remains a candidate for the portfolio. I mean, as I said, I already added the first position. It's a turnaround story that's built on real numbers and actually real cash flow. And it's no longer a company that's about hype so much. It's more about fundamentals now. And of course, Elliot Wave helps us to kind of find the setup, that the price could use as jump-off area for higher prices. So again, we have this 1-2 set up, and we just wait here for reaction of the market. A break above this B wave high around 76.60 should be an indication we're on our way to $100. That's basically it. I hope you liked the update. Hope it added some value. If you're looking to maybe open a portfolio as well or to trade PayPal yourself, please don't treat this as financial advice. You know that. It's just educational, and I just share what I'm doing, and I share my thoughts around the chart and the fundamentals. But if you're interested, check it out. You can consider XTB as a broker. There's, as I said, there's a promotion around the free share, but it depends, I think, where you live. So check it out. The link is in the description. And yeah, hope you enjoyed the update. And let me know which other stocks you would like to see on this channel. And we can maybe add some more stocks regularly here on the MCO channel for stocks. And I wish you a great day. Make sure you subscribe. Thanks so much. Bye-bye.